I want to talk tonight from the perspective of Blue Dog Democrats. Now, clearly, we all know, and Mr. Welch very eloquently talked about the needs of the middle class and people who are struggling. And we all know it's far past time that we reform the tax code by making it simpler, closing loopholes, and lowering rates. However, this bill that we're going to be voting on tomorrow is certainly not the answer for the middle class. Now, it didn't have to be this way. Throughout the year, I heard from Republican lawmakers and from the White House about the benefits of creating a bipartisan tax reform plan. As the policy co-chair of the Blue Dog Coalition, representing moderate Democrats, I coordinated the coalition's creation of key principles needed for a permanent bipartisan tax reform bill. And our reform principles call for the following. First, tax reform must be passed through an open bipartisan process and through regular order. Second, tax reform must be credibly revenue neutral and should not use unrealistic economic growth projections to offset the cost of tax reform or tax relief. Third, American companies need more competitive corporate tax rate and structure in order to maintain their ability to compete globally. And Congress must also account for the needs of small businesses when it comes to setting tax rates. Fourth, and most importantly, the middle class must be the priority in this tax bill. And fifth, Congress should use tax reform to address the funding challenges for the Highway Trust Fund. Taken together, I think most people would say that this is a good, sound set of principles. But disappointingly, H.R. 1 fails to meet these criteria. First, this bill is not bipartisan. The Blue Dogs met with the Treasury Secretary, the Director of National Economic Council, as well as the chairman of the committee. We were told they wanted this to be a bipartisan bill. But the bill was passed in committee less than a week after it was introduced, and less than a day, even less than that, after last-minute changes were made by the chairman. The committee voted down every Democratic amendment on a party line vote. Now, 1 week later, this bill is being brought to the floor with no amendments allowed. This is clearly not bipartisan, and it's tough to argue that this is an open process of regular order where members get to participate in the process. But what about the contents of the bill? First, it's not revenue neutral. We are told that this bill will be revenue neutral using dynamic scoring. That is, when considering additional revenue that will be raised from increased economic growth because of the tax cuts. Some dismiss dynamic scoring out of hand, but I believe it can be legitimate. But as we're about to vote on the bill, even the idea of having an official dynamic score of this bill before voting on it seems to have completely disappeared. What we do know is that the Nonpartisan Joint Committee on Taxation says it will add nearly $1.5 trillion plus interest to our debt, which is currently $20 trillion and growing. The one rough dynamic score that's been produced by the right-leaning Tax Foundation shows that this bill, as originally introduced, would still add over $1 trillion to our debt. And this new debt is not even used to put the needs of the middle-class Americans first. The bulk of the benefits from the bill favor businesses and corporations rather than individual taxpayers. The Tax Policy Center estimates that families would get the benefit of about 1/3 of the tax cuts offered by the bill, with corporations and other businesses getting twice as much. This is because of the unbalanced way in which business tax rates are lowered with relatively few cuts to corporate deductions. But as we've heard many of our speakers talk about, all the deductions, they're going to hurt middle-class Americans as they try to deal with growing expenses for health care, education, and child care. Of course, true tax reform can alter some provisions in order to simplify the tax code. But we must make sure that at the end of the day, middle-class families' pocketbooks are not harmed by the changes that we make. While many tout that this bill doubles the standard deduction, it's important to understand that it also eliminates personal exemptions. This means that families with children or other dependents may be worse off. There are other examples of deductions lost that will negatively impact middle-class families. We have heard many of them, including the medical expense deduction, which means that families with very high expenses, such as long-term care for extraordinary illnesses, will pay higher tax bills. The bill also makes student loan borrowers pay new taxes on loan interest they pay. And the list goes on. One particularly contentious part of the bill is that it severely curtails the deduction individual taxpayers take for state and local taxes paid. Supporters of this idea claim that the deduction is an unfair subsidy from the federal government of high-tax cities and states. But my own state of Illinois, where taxpayers will get hit hard by this, we already get only 79 cents back from the federal government for every dollar we contribute in taxes. And taking away the state and local tax deduction will only make this discrepancy worse. Now, one particularly troubling aspect of this bill is that while it adds some new incentives to make it easier to raise children and support families, these incentives expire after 5 years, even as provisions that primarily benefit high-income taxpayers and corporations are made permanent. When analyzed as a whole, the Nonpartisan Tax Policy Center predicts that any tax relief some middle-class families might receive from this bill will disappear over time. Yet families in the top 1% and even the top 0.1% will not see only immediate relief, but even larger returns in the long run. Finally, this bill does nothing to address the major tax issue that our nation faces, the fact that the Highway Trust Fund that pays for federal roads and transit projects is taking more and more money every year out of general revenue. We need to fix the Highway Trust Fund, and if we did that here, we can also start finally doing some of that infrastructure, that trillion-dollar infrastructure bill, those projects that the president keeps talking about. So once again, in this bill, the House is choosing to pursue a needlessly partisan closed process for major legislation with wide-ranging impacts and enormous price tags. I really urge my colleagues, change course. Pursue a truly bipartisan reform so that we do well by American families and businesses that need Congress to act on this critical issue. And I thank Ranking Member Neal